Trading in the stock market is often seen as a golden ticket to wealth, a way to escape the daily grind and live the dream. But for many, especially middle-class traders, this dream can quickly turn into a nightmare. In this video, we will discuss 3 key aspects of trading: how trading works for beginners, the risks it poses for middle-class traders, and the absolute necessity of having a plan before you even think about entering the market. Stick around till the end, as this could be the most important video you watch before stepping into the stock market. And if you're new to our channel, don't forget to hit the subscribe button and turn on notifications. Let's get started. Let's start with the basics. How does trading work? Trading is the act of buying and selling stocks, commodities, or other financial instruments to make a profit. Sounds simple, right? But it's far more complex than it seems. Think of the stock market as a battlefield. Every trade you make represents your belief about what the market will do next. For example, if you buy a stock, you're betting it will go up in value. But remember, someone on the other side of that trade is selling, thinking it will go down. This isn't a random game. The stock market is driven by powerful players, hedge funds, institutional investors, and seasoned traders who have access to advanced tools, algorithms, and years of experience. These are the big whales in the ocean, and for them, individual traders are just small fish. Successful trading requires knowledge of 2 critical areas: fundamental analysis, understanding the financial health of a company, its revenue, profit margins, and long-term growth potential. Technical analysis, studying price patterns, trends, and indicators to predict future movements. Without this knowledge, most beginners trade based on tips, rumors, or emotions. They enter the market thinking it's a quick way to make money. But the truth is, trading is a full-time discipline that requires constant learning and practice. Now let's talk about the darker side of trading, especially for middle-class traders. Imagine this scenario. A middle-class individual, let's call him Ramesh, sees his friends making money in the stock market. He decides to give it a try. At first, he invests a small amount and makes some profit. Encouraged by this, he starts trading larger amounts. But here's where things go wrong. The market turns against him. Ramesh, desperate to recover his losses, takes out a personal loan to invest more. He convinces himself that one big trade will solve everything. But the market isn't forgiving. Instead of recovering his losses, he spirals deeper into debt. The pressure mounts. The lenders come knocking. His family is forced to sell household items to make ends meet. Arguments become a daily occurrence. Ramesh loses not only his money, but also his peace of mind, relationships, and dignity. This story isn't an exaggeration. It's a harsh reality for many middle-class traders who risk more than they can afford to lose. Unlike wealthy investors, middle-class individuals don't have a safety net. When they lose, the consequences are devastating, financially, emotionally, and socially. Trading is not just about money, it's about psychology. The moment you let fear or greed take over, you're no longer trading, you're gambling. And gambling with your hard-earned money or borrowed funds is the fastest way to ruin. So, is trading always bad? Not necessarily. If you approach it with the right mindset and preparation, trading can be a calculated risk rather than a reckless gamble. Here's how. Have a plan. Before you place your first trade, write down a clear strategy. Decide how much money you're willing to risk, your profit targets, and when you'll exit the trade, whether it's a profit or a loss. Understand risk management. Never invest money you can't afford to lose. Allocate only a small portion of your savings to trading. Educate yourself. The stock market is not a place for guesswork. Learn about technical and fundamental analysis. Study how markets react to news and economic events. Control your emotions. Fear and greed are your biggest enemies. Successful traders maintain discipline even in volatile markets. Start small. Begin with small trades and gradually increase as you gain experience and confidence. Remember, the stock market doesn't owe you anything. It's a competitive arena where only the well-prepared survive. If you can't control your emotions or stick to a plan, it's better to stay away. Without preparation, you're just gambling. And gambling has no place in the life of a middle-class trader who has everything to lose. The stock market can be a powerful tool for building wealth, but only if you approach it with the right mindset and strategy. For middle-class traders, the risks are high and the margin for error is small. Don't let the dream of quick riches turn into a nightmare. Trade responsibly, educate yourself, and never invest more than you can afford to lose. Remember, in the stock market, discipline and knowledge are your best friends. If you found this video helpful, share it with someone who needs to hear this. And if you're new here, subscribe to our channel for more content that helps you navigate the challenges of life and finance. Thank you for watching, and as always, trade smart and stay safe. Stay tuned for more videos on personal growth, finance, and success. See you in the next one.